Have you heard about the sudden drop in Bitcoin's price? It has shaken many investors.
Absolutely. We've seen dips before, but what's different this time?
Welcome to Financial Insights in Minutes, your go-to channel for key summaries on cryptocurrency.
Today, we'll cover the most pressing issues in the crypto world.
Let's get started with an exciting recap of the following videos. First, we explore the reasons behind Bitcoin's recent flash crash and its implications. Next, find out why owning just 0.01 Bitcoin is more significant than you might think. Then, we discuss the current state of the crypto market and its price fluctuations. After that, we'll unravel the effects of Pavel Durov's arrest on the crypto landscape. We'll take a closer look at the promising future of Solana in the crypto rankings. Next, we examine how Russia's pivot to crypto could redefine global finance. Then, we will analyze the potential economic shifts with upcoming rate cuts. Finally, we'll talk about growing concerns over stringent KYC regulations for traders. Welcome back to CryptosRUs, your beacon for cryptocurrency insights. Today's topic: what caused Bitcoin's startling flash crash? Buckle up because we're about to dive deep.
That's right. The drop from $63,000 to $59,000 has people talking. But what's behind this flash crash? Spoiler alert, it's not all doom and gloom.
So, what's the crux of this story?
The major takeaway: today's drop stems from significant long liquidations worsened by Ethereum's decline. But does this mean Bitcoin's bull run is over? Absolutely not.
Let's break down key points. How was the broader market behaving today?
Interestingly, the overall US market fared well while Bitcoin nosedived. It raises some eyebrows, doesn't it?
So, what triggered the drop then?
A wave of long liquidations drove the sell-off, wiping out up to 10,000 Bitcoin in just 2 hours.
And what about Ethereum? What's its connection?
Ethereum's troubles could have ignited fears, prompting big sell-offs in Bitcoin as traders reacted to market conditions.
Could there be manipulation at play here?
Absolutely. Market makers and big players flex their muscles, often triggering sudden price shifts.
What's the sentiment moving forward?
Despite the turmoil, many believe Bitcoin's bull run isn't over and encourage continued investment.
What can we predict from today's events?
Many analysts foresee a comeback. Historical trends suggest resilience in Bitcoin and a surge in altcoins shortly.
How might investors react?
Investors are poised to buy the dip, capitalizing on the lower prices for potential gains ahead.
So what are the final thoughts?
Stay vigilant. Volatility is part of the crypto game, and with every downturn comes the opportunity for growth.
And we want to hear from you. What are your thoughts on today's events?
Drop your predictions and insights below. Let's keep the conversation going about the wild world of crypto.
Welcome to Altcoin Daily. Today, we're sailing into some intriguing waters, discussing why owning just a smidge of Bitcoin could change your financial future.
Absolutely. We'll dive into why even owning 0.001 Bitcoin is worth more than you think. Spoiler alert, it's not just about the investment.
So, what's the crux of today's discussion?
The core idea is that as real estate prices soar, owning just a little Bitcoin could be your ticket to not only surviving but thriving in the coming decades.
Let's dissect this first point. Bitcoin seems to be winning against real estate. What's happening there?
Exactly. The average cost of homes has plummeted in Bitcoin terms, highlighting how asset values are shifting. It's a peculiar trend that's definitely worth noticing.
Now, let's talk about BlackRock. They've been sneaky with how they're handling Bitcoin, right?
Oh, yes. They're accumulating Bitcoin like it's going out of style. Their recent ETF moves are a clear sign of their strategy to push more liquidity into the crypto space.
What do experts predict about Bitcoin's future?
The shifting demographics lean toward Bitcoin as an asset that provides flexibility. People are prioritizing experiences over ownership.
What about predictions for home prices and Bitcoin's role?
Experts believe housing prices could skyrocket. Bitcoin might be the bridge that keeps you connected to those future assets.
And what about the big guys? What's their next move?
If BlackRock is any indication, we can expect a flood of institutional investments into Bitcoin.
To wrap things up, what's the overall takeaway from today's discussion?
In short, owning a small amount of Bitcoin today is not merely an investment. It's a smart hedge against the looming uncertainties of the real estate market.
And what's the verdict on property ownership for young folks?
Looks like that depends on market dynamics. Smart investments suggest shifting focus towards crypto assets might just be the ticket.
As we sail away, what's your take on the future of Bitcoin versus real estate?
Don't forget to drop your thoughts in the comments. We'd love to engage with your predictions and insights.
Welcome to Lark Davis on YouTube. Today's topic is the ongoing roller coaster ride of cryptocurrency prices, and boy, are they dropping again. But is it as dire as it sounds?
Let's get straight to the facts. Cryptos are plummeting again while stock markets hover near new all-time highs. What does this mean for investors? We're diving in.
So what's the crux of the latest downturn in crypto prices? What's the lowdown?
The core thesis revolves around a sudden market sell-off without any significant deleveraging events or macroeconomic triggers. It's a classic case of fear and uncertainty.
Let's break down what's happening right now. What's causing these waves in the market?
The sell-off seemed to stem from a psychological standpoint rather than substantial economic changes, leaving traders feeling jittery.
Now on to Bitcoin. What are the predictions for its price movements in the coming months?
It's crucial to keep watch for $72 as it remains a pivotal point. Historically, significant market movements tend to align with the Bitcoin halving events.
And what about Ethereum and other altcoins?
Ethereum's value is fluctuating, while Solana seems stable, showing resilience despite market chaos.
Let's discuss the fallout. What does the future hold for crypto amidst recession threats?
Truly, predictions indicate we might see a sharp correction as recession anxiety continues to dominate investor sentiment.
And what about a potential turnaround? Any hope for crypto bulls?
Indeed, a recovery could spark as we approach key market events later this year, setting the stage for renewed investor interest.
So, what are the big takeaways for both new and seasoned investors?
Patience and strategic planning are vital. The markets will fluctuate, but remaining informed and ready for opportunities will be key.
As we close, we want to know your thoughts. What do you think will happen next in the crypto realm?
Drop your predictions in the comments. Engage with us on what's next for crypto enthusiasts.
Welcome to Crypto Banter. Today's episode is monumental, potentially changing the landscape of crypto forever. We're diving into an urgent issue surrounding Telegram's founder, Pavel Durov, and what it could mean for the crypto world.
Today's topic is crucial. With the recent charges against Durov, we're not just talking crypto, we're discussing potential shifts in the entire market structure.
So what's at stake? The core thesis centers on the ramifications of Durov's arrest and how it could impact our decentralized future.
Exactly. This isn't just about one individual. It's a potential nail in the coffin for crypto's current trajectory if we allow governmental overreach.
Let's review our first key point, the historical context of Durov's arrest.
This isn't an isolated incident. It reflects growing tensions between governments and crypto, reminiscent of past events that reshaped the market.
Now on to the charges themselves. What do these specifics mean?
The charges effectively create a landscape where creators of platforms could be held responsible for users' actions, which fundamentally threatens free speech and data privacy.
What about the future of crypto in light of this incident?
The future could see tighter regulations, but it also sparks the question, will this drive innovation further underground?
What do we see in the crystal ball for regulatory actions?
Increased scrutiny on platforms that allow user interactions. With Durov's charges, there's a real chance for tighter clamps around Telegram-like services.
It seems we might encounter a shift in user habits, right?
Absolutely. Privacy-focused users might flock to decentralized platforms for communication, leaving centralized models behind.
To wrap up, what's our overall takeaway?
Durov's situation highlights significant crossroads for crypto, necessitating robust conversations about how we protect privacy and innovation in this new world.
But we want to hear from you. How do you see the future of crypto evolving after these headlines?
Drop your views in the comments below, and let's keep this conversation going.
Welcome back to the Cryptoverse. Today's voyage takes us into the waters of Solana. What makes Solana one of the top 5 cryptos by market cap, and why now more than ever is it worthy of our focus?
Absolutely. Solana's explosive rise has caught many eyes, especially as it navigates market fluctuations. But let's not forget historical context. It's important to learn from past waves.
So what's the core message here about Solana?
The main takeaway is that while Solana has shown remarkable potential, its volatility requires investors to tread carefully. Understanding when to enter or exit is crucial.
Let's dissect those performance figures. What stands out?
Incredibly, Solana experienced an 80% drop in just 6 months. It's wild to think it had a 52,000% rally at one point, volatility at its finest.
Digging deeper into its market position, what is Solana up against?
Ranking 4th in market cap and boasting over $71 billion, Solana is definitely positioning itself as a key competitor in the realm of crypto.
What's the story with dominance in altcoins?
Bitcoin's dominance directly impacts altcoins. Solana hasn't outperformed Bitcoin yet, despite its rise, which is a red flag for future performance.
Looking ahead, what are the predictions for Solana?
If market conditions shift favorably, Solana could hit new highs. However, we must watch for potential corrections as overall Bitcoin dominance increases.
In summary, what should viewers take away from this discussion?
Approach Solana with caution without overlooking its potential. Historical context holds weight in investment strategy. Knowledge is power.
Before we sail away, we want to hear your thoughts. What strategies do you see effective for trading Solana?
Drop your comments below. Your insights may just influence our next voyage into the crypto seas.
Welcome to another electrifying episode of Ivan on Tech. Today, we're diving deep into a monumental shift in the cryptocurrency landscape. Russia is making waves with its pivot towards crypto payments. But what does this mean for Bitcoin's trajectory?
That's right. This isn't just a small news bite, it's a potential game changer. With global sanctions forcing Russia's hand, they're turning to cryptocurrency for cross-border transactions. But could this be the dawn of a new era for financial freedom?
So what's the core thesis here? What implications does Russia's move carry?
The main takeaway is that Russia is leveraging cryptocurrency to bypass traditional payment systems like SWIFT. This could signal a shift in how nations transact, potentially democratizing financial systems worldwide and shifting power balances.
Let's dissect those key points. What's the geopolitical significance?
Russia's pivot to crypto is particularly fascinating. Other sanctioned nations like Iran could follow suit, creating an alternative financial system that could challenge traditional powers. It's a chess game played on the global stage.
And what about the logistics of implementing these changes?
Absolutely crucial. Russia aims to develop and launch crypto platforms by September 1st. This could prompt a dramatic change in international trade, allowing countries to build front-end applications on top of these open crypto rails.
How might this reshape the global financial landscape?
If implemented effectively, we could see all nations adopting a shared crypto infrastructure, leveling the playing field tremendously. Imagine a world where no nation holds exclusive power over international transactions.
Looking ahead, what predictions can we make about crypto's future?
The likelihood of other nations adopting similar crypto frameworks for transactions is high. This could lead to a more integrated global economy, but the regulatory landscape will need to evolve as well.
And what about the potential economic shifts?
Emerging markets, especially those facing sanctions, could leverage crypto to enhance their economic power. In contrast, traditional financial institutions may struggle to maintain influence in a rapidly changing system.
To wrap things up, what's the overarching message here?
Russia's crypto movement isn't just about bypassing sanctions, it's about redefining the landscape of global finance. It sets a precedent that could inspire a cascading effect among other nations.
What do you think the implications of these developments will be? Share your thoughts.
Yes, be sure to comment below. Your insights could play a role in shaping the conversation around this financial revolution.
Welcome to Coin Bureau, where today's headlines will navigate the stormy seas of cryptocurrency, economic forecasts, and political developments. Grab your life jackets, everyone.
Absolutely. From potential rate cuts by the Fed to the implications of Pavel Durov's arrest, there's plenty to unpack. This week is shaping up to be eventful.
So what's the core thesis of today's buzz? Economic winds are shifting, especially with the Fed hinting at rate cuts.
Correct. The potential for these cuts creates ripples in the crypto space, especially with Bitcoin's rising dominance and what inspires the political players like Kamala Harris.
Let's kick off with the Fed rate cuts. What's new on this front?
Jerome Powell's comments have analysts eyeing a modest 25 to 50 basis point cut soon, a change possibly affecting the entire market. Exciting times.
Now, politics plays a major role too. What's happening with Harris and RFK?
Kamala Harris is reportedly leaning towards supporting crypto-friendly policies, while RFK Jr.'s endorsement of Trump could influence future crypto legislation.
What's cooking internationally? Some exciting developments, I hear.
For sure, Brazil's spot Solana ETF approval and the UAE's stance on salary payments in crypto mark significant moves, while Russia is aiming for a state-backed exchange.
How are markets expected to react to potential rate cuts?
Market analysts predict that favorable conditions could lead to a bullish Bitcoin environment, setting the stage for altcoins to shine next.
What about the political implications? Any predictions on that front?
With the political landscape evolving, pro-crypto policies could stabilize regulatory frameworks, providing stronger investor confidence in the long haul.
To wrap it all up, what are the key takeaways from today?
It's clear the market is facing a transformative period. With potential Fed cuts and evolving political support, the crypto future looks promising.
What should viewers focus on moving forward?
Staying informed is crucial. Thus, keeping an eye on both economic indicators and political developments will be key to navigating these times.
And lastly, what do you think will happen to the crypto market in light of these developments? Share your thoughts.
We want to hear from you in the comments below. Let's keep this discussion flowing as we sail through these turbulent waters.
Welcome to BitBoy on YouTube. Today's discussion is urgent. We're diving into a crypto emergency that every trader needs to hear, especially regarding new KYC regulations. Hold tight.
That's right. It's not your average crypto video. We're discussing some crucial changes that will affect all American traders. Get ready for must-know insights.
So what's the central issue here? Why this urgency?
The core thesis is simple yet alarming. New advanced KYC requirements by exchanges are restricting trading options for Americans, which could profoundly impact those actively trading cryptocurrencies.
First up, let's discuss these KYC requirements. What's the scoop?
Exchanges are tightening up. New accounts created post-September 1st require advanced KYC compliance, meaning traders must verify their identities more stringently. This isn't just a hiccup, it's significant.
And how does this affect traders in the US?
American traders face severe limitations in exchange options. The pressure on exchanges is high, with compliance costing lots of money. All roads lead to one massive question: will you be forced to adapt or lose access?
What long-term consequences should traders worry about?
Risk is real. If KYC requirements keep increasing, traders could lose access during vital market opportunities. Could this push traders into dodgy alternatives? Absolutely.
Any predictions based on these trends?
Well, if KYC continues, American traders may find themselves locked out of many exchanges. This loss of access during critical market moments could drastically limit trading strategies.
Right. And what about alternatives on the horizon?
With the rise of compliance, digital IDs like the Palau Digital ID might gain traction. Traders are already eyeing decentralized exchanges to sidestep these restrictions.
So what's the final word?
The need for traders to adapt has never been more crucial. With changing landscapes, strategies need reevaluation, and innovations like digital IDs may become necessities. Climate's ominous, so prepare now.
And as we wrap up, the big question is, how will you adapt to these changes?
Absolutely. Share your thoughts and strategies in the comments. It's time to collectively navigate these shifting waves in the crypto world.
We've uncovered critical insights on Bitcoin's volatility and emerging altcoins today.
Moreover, we analyzed the potential implications of regulatory changes affecting the market.
Thank you for joining us as we navigate through the complex world of cryptocurrencies.
Don't forget to subscribe for more essential updates and analyses.
Thanks for watching Financial Insights in Minutes for August 28th, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.